Good afternoon, everyone. We are back with another live streaming session. We have done with two live streaming session in the morning and in the afternoon session. Now we are at the post market. We will be doing sessions which will be helping you to understand the valuations of a company, like why valuations plays a very important role while uh, doing your stock market investment. So we will get all into it, but before that we will just go through quickly go through our returns which we have provided right till then, and whatever the store holdings which we have, and what are the entries which we have made today, and what holdings are doing currently. For those who don't know me, my name is Aditya. I am your live streaming analyst for today, and uh, have been into the financial journey from last 7 years. I have been continuously in the trading industry for last 7 years, and in my journey, I have managed more than 100 crores of wealth for the client and have given them the returns tremendously. So you can be rest assured from where you are getting the returns. My analyses are fully based on fundamental analysis. We evaluate each and everything from going to the financials of a company, be it income statement. Secondly comes the balance sheet, also the cash flow statement. I analyze each and everything in detail. Then we go for the industry analysis, what industries are performing, the macroeconomic perspective, the how the economy is running through, and how the industry will be getting benefit out of it, and what are its advantages, the company advantages in the industry itself. Is it able to maintain some good net profit margin as well, right, for generating profitability of a company, so that the net income goes and subsequently the revenue grows through it. Also, we go through the SWOT analysis. What are the strengths of our businesses? What are the weaknesses of our business? What are the weaknesses of our businesses, right? And then we come to the future outlook, and then we give our investment advice to you. What are our views? Why we are very bullish in a stock, and provide you with the recommendation. So for today, we had already provided you with the recommendation of Hindware AP at the level of 295 to 305, and the fast target price is at the level of 310 and 320. So just have a look what it has done today and how it is performing for today. We'll just go through the trading view platform. We will just search Hindware. So just look at the Hindware we have today. Hindware has closed negative, positive 1.89%, and it has closed around the level of 299. So it is under our buying zone at the level of 295 to 305. So we don't have to worry about much. The stock is at the buying level, so you can make an entry tomorrow also if the stock is in our zone. If it is in the zone of 295 to 305, it makes a smart investment move by entering Hindware HME Innovations Limited. So we have provided you with the entry. We have provided you with the resistance level as well, also the support level which we can see, and the flip zone has also been provided to you. The entry we had made at this level 295, and here is a flip zone. It is trading around the resistance and flip zone, and once it get back to the level of 305, it will be easily able to make it marks around the level of 310 and 15, our first 5% target price. So be rest assured about that. We will be making profits in Hindware as well. And you have been seen, we are consistently delivering you with the returns. We are consistently delivering with the profits for you for many of the stocks, and for few of the stocks which we are not able to make any profits, we have been averaging it down so that you are able to make profit in that also, even if you are not reaching your first buying price, right? We have explained each and everything to you, and now we are seeing that we will just arrange it from negative to positive order first we have to analyze our loopholes, right? What are the defects in our holding, and then we can go for the strong point. So that plays a very important role. First, you have to analyze your uh, disadvantages and what stocks are not performing and why they are not performing it, right? So for that, we will be doing the valuation analysis today. How to value a company to invest in. We'll just go through that, but before that, just look at the performances we have done. Poonawalla is negative of 2.32% as of now. Kirti Industries is negative for today. So four stocks are negative out of nine. Like, and whatever stocks we are positive, Annapurna Swadis is positive 0.37%, Avantel 1.03%, Hindware HME Innovations 1.89%, and DDEV Plastic is positive by 2.37%. And IP Ring has done tremendously well today. It has increased by 4.06%. So in just one day, IP Ring is able to make a recovery of 4.60%. So the 5% profit mark is not so far. We will be easily able to exit at the 5% profit mark at the level of 210. So be rest assured about that. And for all the holdings we have, we see there is a market consolidation. Market is having some uncertainties. In the morning itself, we have seen the market fallen by 300 points and then making a recovery. It was fallen around 300 350 points, and from then there was a market recovery towards it, and it has come to its not only it has recovered, it has made a significant gain. So just look at the market potential it is having. It is showing some strong signs as of now, even after the falling of for 350 points. It has been able to maintain its growth and have grown by and have closed up by 200%, 200 points. So these are the nifty levels we are seeing. And looking into the returns which we have in our holding. So as of now, closing of 13th of December, this is a Friday, we have made our entry in Hindware on 11:36 a.m. We have made our long position at the level of 295 and 305. So remember, when you enter the stock, you are entering at our levels only, right? In Monday, if you have missed this opportunity, the market is closed as of now. So remember to entry at our level. We have also made our entry at Kriti Industries India Limited. It is listed in NSE. So you can just go through it. You can look for entry in Kriti as well. So Kriti will be also be making a new investment opportunity. So from last days, on 11th of December, we have made our entry at Kriti, and today we have made our entry at Hindwell. So if you have missed these two stocks, just make sure you are entering at Monday and making your profits book on next week only, right? So till now, if we look at the profitability which we have generated, we have been consistent with our profit, and almost all of our clients are making quick money, right? Because we all are here to make money, and making money is not hard for us. Remember, making money is not hard for us. You just need the right guidance, right support in the market to make money. So just remember that out of just executing 37 trades, we are able to make 227% of profitability. We are not going for 1 2% of return also. We are not going for larger returns like 50 60% 100% of return. We are getting returns of 5 to 10%, which is a decent return and has been doing consistently well. And in just 3 months, less than 3 months, we are able to provide you with the good returns, right? So just look at it. Whatever the returns we are providing, each and everything we are providing, it's not hidden like other competitors. We are providing it on our live streaming basis. Whatever the stock Excel sheets we have, whatever the profit tracking, stock tracking, we update it on our daily basis. Like whenever we will having end of the day, we'll be having this date close or the 13th of December, and a stock holding will be updated accordingly. So you, when you are continuously watching our video, you are getting to know whatever the recommendation we are providing is on live streaming, and whatever the exit we will be taking is on live streaming. Even if we are not on live streaming basis, I request each and every one of you to make your trade close on your own at the target price. Our assistant are there who are continuously making you to make your trade close at the profit level and make you some good amount of money. So just remember, we are here to make money. We are not here to lose money, and you cannot afford to lose your money, right? We invest our hard-earned money in the market, and we cannot afford to lose that. So completing this, we will be coming to our valuations, the Excel sheets which we have, how we how we do the valuing a company for a stock market investment. So how we value a company, right, for the investment purposes. When we are going for to buying a stock, how do we value that? How do we value a company? And we will use only one approach, which is our mastery at a fundamental analysis approach. We will go through the fundamental analysis approach, right, and you will understand why valuation is important. So, first question is why valuation is important. Why valuation plays a very important role, right? Valuation is the cornerstone of fundamental analysis. Just look at it. Valuation is the cornerstone of fundamental analysis and investment decision making. So we have been doing with the many valuations in fundamental analysis as well, and from the valuation itself we come to know either the stock is undervalued or overvalued, and it makes an opportunity to invest right now or not. So valuation is a cornerstone of fundamental analysis and investment decision making. Just remember that. Also, it helps to determine the stock is overvalued or undervalued, right? Also, by understanding its intrinsic value, investors can achieve better returns. Suppose we have a stock, and it is trading around the level of 1,000. Okay, but you have done the analysis, you have got the intrinsic value that the stock could be valued at 800 rupees from your analysis, but it is trading around the price of 1,000, so it is overvalued for you. And for the other stock, you have been doing valuations, you have come to know the intrinsic valuation is 800, and the stock is trading at the level of 600. So it makes a very good investment opportunity for you, because the valuation is more good in stock B as compared to stock A. So you will be investing more of your money in stock B rather than A, which is a less attractive valuation. Right? The valuations are overvalued for stock A and undervalued for stock B. So you will be going for stock B investment. Just remember that. So, what are the why the valuations are important? We will analyze step by step, right? What is the step one? Understand the business. How we will get to know and how we will understand the business, right? So we have to do the industry analysis. Trends, we have to go for the trends, we have to go for the growth potential, we have to go for the competitive landscape. So we have to analyze industry very deeply. What are the trends they are following, right? What are the growth potential and what are the competitive landscape? Suppose we go for a real estate sector, right? In real estate sector, we have to see what trends it is following. Either it is bullish, people are bullish investing in real estate sector or not. So that when the trends will be positive, we will be able to know about this growth potential also, right? We will be able to know about this growth potential, and we will also understand the competitive it is facing. Real estate is very competitive market. In that, how the company is overcoming that competitiveness and making profits for the investor. So the stocks are growing, right? And secondly, it comes to a business model, revenue and profit generation. So we have to look how the company is generating the revenue, right? And from revenue, what are the profit margin, what are the net margins, the profit margin, and what are the total profits it has. So it is very important to know the revenue part and the profit part. Now coming to the key matrices, revenue growth, like track sales increases over time, right? Profit margin, we have to look after gross, we have to look after operatings, we have to look our gross profit, we have to look our operating profit, we have to look at our net profit. So what are the profits it is generating? The gross profit is good or not? It is increasing on quarterly basis or not? The operating profit, the company which is doing its businesses, from operations, it is generating profits on that or not. And the net profit, what are the profit it had currently till now, right? What are the net profit the company is making, what the money is going into their pocket, so that they are able to reinvest their money, they are able to or divides it among the its shareholders in the form of dividend. So we have to know about that. So, secondly, we have to go to the depth level. We have to analyze the financial risks. So, we will know that what are the risks in the businesses, right? What are the risks in the businesses? Either they have high interest payment or not, and we have to analyze that if they have taken much of a loan, so their profit will be going for the interest payment, right? So we have to look into that. The businesses is not paying much of a profits towards this loan, so that they are not able to invest or divide it among the investors. What is return on equity? We have to look how it is providing the return on equity, which shows the efficiency of shareholder returns, right? Efficiency in terms of shares return. So we have to look at the return on equity level as well, how it is able to provide you with the good returns. Step 2, by analyzing financial statement, right? So we have been doing our financial statement analysis from the beginning of the fundamental analysis. This is the most important concept in fundamental analysis, how we need to analyze the financial statement. So basically there are three statements which are available for analysis. The first one is income statement, the second one is balance sheet statement, and the third one is cash flow statement. What we look in all these three things, all these three statements: first, in coming to the income statement, we look after the revenue. Secondly, we look after the operating profit and the net profit trends. The revenue plays a very important role, right? And the operating net profit trends, what is the net profit they are making after generating the revenue. Even if the revenue is high, revenue is increasing and the profitability is decreasing for the company, that is a serious concern, right? So we have to look how much revenue is growing for a company, how much operating profit is growing, and what are the net profit trends from its revenue which are able to generate. If the net margin is good on the profit, they will be surely able to make good profits in the from their revenue, right? And the company, as we know, the stock market follows the profit. When the profit of a company goes, the stock prices grows. Remember that when we will see the profitability of a company is growing on a continuous basis, the stock market, the stock price is following its mark, the price will increase subsequently. Secondly, we have balance sheets, right? What we analyze on that? We analyze, it is a very basic, we analyze the assets, we analyze the liabilities, we do the equity analysis, right? So it is very common. We have to look at the assets, how much company assets is there in a how much company assets are there. For different sectors we have different assets. Suppose for a pharma sector, for technology sector, the assets are close. For FMCG and other units, the assets has to be more. For banking, the assets are low, but the stock prices, their valuations are much more higher, the market capitalizations are much more higher, because most of the businesses they do are online, are being digitalized. It is not like before, the bank used to have many assets, many paperwork, but it has reduced now. So remember, banking has been digitalized as of now and been performing really well. What are the cash flow statement? Operating cash flow for earning quality, right? So we have to look at the operating cash flow for earning quality. Just look into it, why cash flow plays a very important role. In step 3, we have how to select a valuation method. Select a valuation method. Intrinsic valuation. How do we do in the intrinsic valuation? We go for the discounted cash flow valuation. So it is a very vast topic. The discounted cash flow is a very vast topic. We look at the future value and the present value of a stock. We assess that the what will be the value of a business 10 years after today than it is running now. Suppose I will explain you the example. There are many concepts called inflation, the future value and the present value you have heard about, right? So what we do in that, we have to assess if the value, if the company is running, if the company is generating 100 crores of revenue today and the profitability is 10 crore, so what will be the revenue and profit after 10 years from now onwards? So we come to the discounted cash flow valuation, right? So we will get to know if it makes a smart investment or not, and if your investment is growing, is going to grow or not. Secondly, we have relative valuation. We do the peer comparison using ratios like PE, price to earning ratio, PB, EV by EBITDA. So relative valuation is also important. We have to look the stocks which is into the its industry, how their peers are performing, how their revenues are growing, how their profits margins are placed, so that they are able to make profits, what are their levels, right? So we have to look after each and everything. Thirdly, we come to the dividend discount model, DDM. For dividend paying stocks, we have to look the stock is paying dividends or not, right? Also, at lastly, we have economic value added, EVA, return above cost of capital. We have to look the stock is providing return at the cost of capital or not, right? It is very important to understand that. Step 4, we are coming to evaluate growth prospects. What are the, how to evaluate the growth prospect? We have to look at the historical growth, trends in revenue, earning, and cash flow. We have to go through the trends where we can analyze what are its historical growths, what are its revenue growth in historically, what are its earning historically, and what are the cash flows. The future growth, we have to look at the future growth analyst estimates or assumption, what the analysts are making assumption about its future growth in terms of revenue, in terms of earnings, in terms of profit. And thirdly, we have sustainability based on market and competitive advantages, right? So we have to look how the company is performing among its peers. There are many competitions in all of the industries, so how it is overcoming that. Step 5, we have to assess risks. So macro risks, economic downturns, interest rate changes, regulatory risks, company specific risks, and valuation risks. So in macro risks, we have to assess what are the economic downturns we can face, right? The interest rate changes, what are the regulatory risks a company can face, right? And we have secondly the company specific risks. If it is having a high debt, right, if it is having a high debt, it is very risky. It is having the efficiency in profit levels making, the margins are not good, so it makes you a risky company. Reliance on one product, if it is not diversifying its products, if the one product is only been sold by the company, if it is not diversifying, and if another competitors comes in the market, what will it be able to sustain the level? It will be not that, it will have a tough competition. So the diversification is very important for any stocks, right? The company does not have to be reliable on one product only. Now we have valuation risks, over reliance on optimistic assumption. So we just look at it, we don't have to be over optimistic on any of the valuation, we don't have to be overconfidence in our investment. We have to value a company based on their valuation, not by our assumption. We have to make our assumption after valuing a company at a good level, by going deep, for going deep analysis. What are the step 6? Step 6, we use the margin of safety, right? Always buy stock below the intrinsic value. For example, we have intrinsic value is around 8,000, buy only if it's trading at 800 or below. 20% safety margin is very important, because when you value a stock, suppose it is trading around 1,000, what is the right position to entry? Right position to entry is at the level of 800 or below, right? It makes your margin, safety margin, very good. So even if the stock falls, the potential remains high to reach its intrinsic value, and you will be provided you with the return. Even it reaches its intrinsic value, you are profitable by 20 to 25% easily, right? So intrinsic value plays a very important role. Also the margin of safety is required to invest below the intrinsic value. Now we have an example. We have look after the all the steps From step one, I will just brief it up. We have understand the businesses, analyze financial statement, select a valuation model, evaluate growth prospect, assess risks, use the margin of safety, right? And we have come to an example why valuation for a stock investment. We will just value a stock company ABC. So the earning per share, you can look earning per share of a company is rupees 50, and in the industry PE is 20, right? The industry price to earning ratio is 20. The EPS earning per share is around rupees 50. So the target price to earning ratio valuation will be 50 into 20, it will be around 100. And the DCF intrinsic value is around 1200. Discounted cash flow intrinsic value is around 1200 for the company. We have looked at the future potential of the stock and we have come to the DCF intrinsic value at around 1200. And current market price is around 850. So this is the current market price. Decision, what decision you will make? You can go for buying as it is undervalued compared to DCF and PE. Even if these two are not matching, if it is not undervalued by this, you have to remain safe. Just remember, you have to remain safe, because if the PE is if the stock is overvalued from its PE, it shows the overvaluation. If the stock is overvalued from the discounted cash flow intrinsic value which you have performed, it is not advisable to invest in that. Right? So just remember, whenever you are making a DCF intrinsic value and the PE are at good level, right? You can enter that stock and make some gains, because the current market price will be lower, and your target price and DCF intrinsic value should be higher than the current market price. Then you can enter the stock and make some profit. So we have come to the key takeaways from the market, right? What are the revenue growth? We have come to know revenue growth. It indicates the market demands and success. Coming to the revenue growth, we have, what does it indicate? It indicates the market demands and success, right? How the company is performing, how how the company is performing in terms of gaining its market share, what industries it is performing. So it is also indicating a market demand, right? For FMCG goods, suppose a new product has launched and the market demand has gone a high, so subsequently the revenue will be growing much high, right? So it is very important to know that revenue growth plays a very important role. Also, we look at the profit margin, which reflects the operational efficiency. Suppose even if the revenue is growing much, right? Even if the revenue are growing to a very good pace, but profit margins are not there. The profit margins are going negative. The net income is going negative. Is it advisable to do that business? No, right? So profit margins has to be there in a business to maintain the net income of a company, to grow the net income of a company, right? So when the company will start making profit, it will be doing great, right? The company has to earn profit. Whenever we set up any business, we set up anything for ourselves, to be into the business, we have to be profitable. We cannot be a loss making company for a long. We have to be profitable to make the company grow more, right? And then we will, after gaining the profit, we can do many things. We can invest in innovations, we can invest in R&D, research and development, we can invest in the efficiency of a company, right? We can invest to improve our technology, we can invest to improve our inventory. We can, if even after all of this, the profits are left, we can divide it among our shareholders, which which will be really helpful for our shareholders, right? So we can do with that. So it indicates why profit margin plays a very important role in every business. The profit margins are very important. You have to look at the profit margins. What are the depth levels, right? We have to look manageable depth ensures stability. We have to look, even if there are the requirements of depth, we will understand why the depth requirements occur. Suppose a business wants to grow itself and they assume that the return from the businesses will be much more than the loans they are taking. So they go at some loans, they borrow some debts, and but we have to look, it is manageable, it is not going out of hand, right? It is not going out of hand, the interest payments, the debt level, so that the company is going bankrupt. We have to look at that level, it has a repaying capacity or not. So that plays a very important role in it. Looking about ROE, return on equity, we have to look efficiency in generating shareholder returns, right? So company is doing continuously well or not. It is efficient in providing you with the returns, right? So you have to look into that. Also, risks. What are the risks? Accounts for macro, company specific, and valuation risks. We have to look what risks the company is into. We have to go for macroeconomic analysis. We have to look. We have to look around that. We have to look about that, how the economy is going, the macroeconomic factors affecting the industry, right? So we have to go deep down into that we are able to understand how the company will be performing, how the industries are growing, the revenue, the overall industry revenue, the overall the how industry is playing an important role in the economic growth, and what are the macroeconomic factors which can affect the industry and as well as the company, right? And for company specific, if we come, we have to look at the core management, how management is doing, what are the backgrounds of management, for what purpose the company has come into the market. We have to look into that very closely. And what are the promoters doing? The promoters are increasing or decreasing their shareholders. Just look at it. The promoter, when decreases their shareholder, there are many chances that the retail investors are buying that stock, and when retail holders, shareholders are buying that stock, you will see what, the fall in the price of the stock. And when promoter stays constant, when promoter starts increasing their shareholding, what it means, tell me. It is historically proven, when promoters increases their stock, for most of the time stock gets increases, and when promoter sells their stock, for most of the time the stock reduces. So we have to look at the promoters holding also to know the company specific need. Also the valuation risks, right? If the company is overvalued, the PE are very high, right? It is not able to provide the earning on per share basis, the EPS starts becoming low, and PE is high, so it is very risky for an investor to take position in that company, right? What is the margin of safety? We have to look at the margin of safety, the protect against errors in valuations, right? We have to look at the margins of safety which we can use. What margins of safety we can use? We have to look if the stock is trading above its intrinsic value or below its intrinsic value. What we can do for that? We can go for DCF valuation, we can go for PE into EPS multiplication, so that we will be able to know the valuations of this, right? And these are the key takeaways from the market. We have come to the close of our explanation. Here we have come to know how to do valuation and why valuation plays a very important role in market and valuing a company for a stock market investment. Because at the end of the day, we are all stock market players, we are here to invest our money and gain some return. So you have to understand where our money is getting invested, and the money, is it in safe place or not, and either it is undervalued or overvalued. After doing all the analysis which we have provided, starting from the step 1, understand the business; step 2, analyze financial statement; step 3, select a valuation model; step 4, evaluate growth prospect; step 5, assess risks; step 6, use the margin of safety. We have this example, and key takeaways are given. So just remember, don't forget any step. If you want to take a screenshot, you can just go through it, just take a screenshot, and you will be rest assured about that. You will be rest assured about making profit. So this is the last step. Okay, so we have come to the close of our session. For any of you had any doubt on this session, you can come up with me. You can connect with our assistant, and we are here to provide you with all the queries you have. We are here to resolve all the queries. On Monday, we will come and see what our stocks are performing, what our holdings are doing currently. Till then, take care, happy investing, stay profitable, also a happy weekend.